Hello and welcome to another video. In this video, we will be reviewing the Warren Buffett portfolio and especially his top 10 stock. Okay, so myself is Pramod Kumar. I am a CFA charter holder and the FRM certified, and I also run my vlog on Rise Analytics. Okay, so I'll try to put video on my channel, especially on the fundamental analysis of the stocks. Recently I did on the Apple, Facebook and Nike, and I thought why not just do some big guys portfolio, right? And when I was thinking which one to pick first, either the Bill Gates or Charlie Munger or Warren Buffett, so there is no doubt that is a big guy, is very strong personality and makes a tons of money in the stock market. So, and is the value investment guru, the Warren Buffett, right? So in this video I will highlight is as of May 2020 his top 10 stocks, and I will be also sharing his what percentage he's allocating to that stock. But not only that, but I will also go over his sector allocation, his industry allocations, what if it's a dividend or not dividend, and some my general opinions. And this is I'm because this is not very deep down, it's just overview. I like to keep this as a conversation with you and also like to know your opinion, right, based on what you think as compared to your portfolio, right, and also give my opinions on this, because here the ideas of this channel is to improve the financial education and to go from there, and basically also to chat, right, so we all grow and increase our wealth, right? So without further delay, we can start it. But if you're new to the channel and you haven't subscribed, so I request to kindly subscribe and also press the bell icon so you'll get the notification on the new videos, because now these days I am often produce the new videos. And if you want any particular stock for me to cover, do keep, but I do have some other videos which you will like. Okay, so before I get started, right, so let's say as of 2020, maybe I'll yeah so as of 2020, this year in May, when I did the search in Google, right, I find about the Warren Buffett net worth, right, which is 67.4 billion USD dollar. The number one guy is Jeff Bezos. Most of the people for sure knows him, need no introduction. He's on the Amazon, right? And then the next one is another one, Elon Musk. After this, seems like people mostly searching for this. I'm not sure whether this is in order, but that's what basically simply Google gave it to me. Maybe because people are searching for these peoples, right? And the US Donald Trump, which is the US president at the moment. Elon Musk is also a very respectable guy. He has many other companies, Tesla, SpaceX, and he knows for his work, and he makes shows in his net worth as well. Warren Buffett, it shows he's 89-year-old this year, so it's quite a big journey, and he's still very active and make. And it shows where he's born and 3 children. But also interestingly, I also put some of his very famous quotes. He says, "We simply attempt to be fearful when others are greedy," right? So this is very deep meaning lines, and to be greedy when others are fearful, right? So when others are fearful at this time of the market, especially in the coronavirus time, so it seems like he wants to be greedy. Greedy means he go there and pick up more his value stocks there. Another good things I also like about one more quote is there is, price is what you pay and value is what you get, right? So he's paying the price, but he's looking, okay, what's the value out of that I'm getting. So previously, before, when I didn't know his stock, I was only thinking honestly that if the P is lower or is a dividend paying, and if it's the cheaper stock in terms of the book value, right, rather than the market value. Those are the things he's looking, right. But when I looking in his portfolio now, I think no, the meaning of the value is different, right. is I see some stocks which doesn't have any dividend, which are not very large cap stocks, and I'll go through in that one as well. But I think the mostly and he has certain exposure, very not like he's diversified, but he has certain exposure in certain very high, and seems like he only deal with something which he knows. Let's put this way, right? So he's a talented guy for sure. Okay, and he's the fourth wealthiest person in the world as of 2019, right? So it's been written here, and at that time his wealth was 88.9, but seems like this year his wealth dropped significantly from that amount. Okay, so that's also good to see. Okay, okay, so let's get started without any further delay. Okay, so this is the Warren Buffett portfolio. So these are his top 10 stocks, 1 to 10 I listed here. The number one stock, you notice his allocation of his capital is 35.52%, which is huge, right? Seems like he's heavy bullish on that stock. And if you watch my earlier videos, which I make, you might know already which one is this stock. Or let's see if you can make a guess, because the next slide is on that stock. And the next one is a huge difference from the first one, is 11.19%, and then 10.08, 7.39, and so on. And I noticed after the 10 stocks, when I was trying to chop how far I have to go, I thought after that it's more like 1% and very, very low percentage in terms of the capital allocation. So I thought just top 10 is good. Maybe top 5 was not that much, but I will. So that's one of the reason I picked top 10 as well, and it sounds good as well. Okay. Okay. So don't think that he's only these 10 stock, but he has many other as well. But the capital allocation is lower. That's what I want to say. Okay. So before we go on to the individual stock level and quickly see, always good to see, okay, which sector he's mostly exposed to, right? So mostly if you see he's exposed to this financial sector or technology sector, which is 42%, the consumer defense sector is 17%, and healthcare is only 2%, and the financial is 39%. Okay, so these is from, if I put the weights, some of the weights on allocation based on the sector, these are the compositions I will get. So he doesn't go beyond that. So he's very limited to these 4 sector, right? So that's what it's mentioned. The next one is, comes out quite big, but the dividend by sector, right? So you also notice and that healthcare brings 0 dividend. I cannot see anything here. The most of the dividend is coming from the financial sector, and if you remember, and the 28% is from the consumer defensive, and the technology is only 16%. But if you notice on the previous side, 56% is the financial sector, but his allocation of capital is not that is not highest in the financial sector. So this means he doesn't care whether the how much company is giving dividend, right? He not only making the decision of that, so that's not the primary factor. So that's one of the thing I'll get from here. Or maybe because he buy in that also so much that he wants pretty much things from the enterprise value of the company, right? Because from that perspective, okay. But from the common perspective, so we cannot just say, okay, because of the sector dividend is high, so his allocation is high. So that hypothesis, as we have earlier, which is wrong, right? So that's we get from this page, okay. So let's go one more bottom. So next I'll go from sector to which industry he has. So if you look into the industry, which is the consumer electronics, credit services, consumer electronics is the highest percentage, 35.5%, one of the highest. And Then he also has credit services, right? Banks, diversified, right? So he has that. So, and then regional side bank as well. Seems like I should make a sum here. So seems like if I jump sum this one, it should be it should be higher. So my bank diversified split it. So it doesn't give a good matrix, but pretty much if I say on the banks, it's quite good, right? Because the financial sector is 39%. Okay, so don't take this as it is on this slide. Sorry about that. I just realized it. But overall, this give this. But the main thing is, if I go on one step down on industry, because the moment I'll go to the each ticker or each stocks and show you the weight, right? But if I see very high level, he has on the banks, the beverages, he's going packaged food, beverages for sure, non-alcoholic. You already might already guess is if you have attended or listened his webinar on these stocks. Yearly he hosted those. Then which company is that, right? The medical facilities and credit services and all. Okay, so these are the ones. Okay, so the first one is the okay. So here I have fixed the industry allocation. So yeah, just discard that orange color and focus on this one. So here we have the banks in the diversified and on the regional. So basically these are more like a local banks industries, and these are more like a global base. And you see the allocation here is broken down to 19.2% of his portfolio, and on the bank region is only 2.6%. Okay, and the beverages is non-alcoholic beverages is 10.1, and the consumer electronic is this it seems like one sector one consumer electronics is 35.5 percentage. Credit services is 7.4%, and the financial, medical, and packaged foods are also there, which is 4.6 and 7 and so on, right? Less than is pretty, but the heavy weights are going on the banks, these two industries, and the consumer electronics, right? So this is the good one. I'll try to chop the other one on the video, but I'm not very proficient on the video editing. But please focus on this one, okay? If you want for the industry allocation on the Warren Buffett portfolio, okay? So yeah, so let's continue on the now, which we are now more on the individual stock level or the ticker or the company level, right? Or ticker level, okay? Yeah, so the first one of this pie which I have introduced in is no guess is the Apple stock. Okay, Apple stock is the 35 point, and these are the number one and number one. So this is how you can relate it, and you see this is a major chunk of his portfolio. I did a full fundamental analysis on this stock just yesterday and posted as well. And in that one, I also I went to the 10K and the fundamental analysis of all three balance sheet, income statement, and the cash flow statements, the return on equities and trend for 10 years. So I started from 2010 and see, okay, which one is how the company is overall doing and not doing, and try to find some good points, some bad points. So if you really want to see that, so I'll suggest go to that video, and I try to put a link there, but if not, it's on my stock in my channel, right? Just search it, the Apple stock or Warren Buffett top portfolio stock, you will get it. Okay, so this is the Apple stock. I also own this stock, and I think this is a good stock. At the moment the PE is 24, the price is going in the market. So when I did this is the May 2020, and the beta is 1.15, and this is a dividend paying stocks, right? So this is a huge large cap stock. If you see, the market cap is 1341.65 billion dollar, and this is the US stock. So I think I also mentioned I find that all, and you also might notice, well, I'll go there, that all the his stock, his exposure is in the U.S. market. I didn't, you won't find anything in a different market, right? So I think most of the people already pitched on this, and I also mentioned on my channel the video. So let's go to the next talk. The next talk is the Bank of America. This stock is basically the US bank. This is a US bank. Is the from the market cap is no doubt that this is the bigger bank. The Bank of America, if I'm not mistaken, this bank, when the last time credit crunch happened, they bought the investment bank Merrill Lynch, and after that this share price also is lower. Good point I find here is, if you see the PE ratio is less than 10, so this is seems like it's a good buy, and it's looks, if I ignore the other fundamentals from that perspective, it doesn't look expensive. And this is a ticker. You can go to the Yahoo Finance and other, and if you want me to cover this stock, just put in the comments. The beta of this stocks, which I really don't like, is over 1.62, right? Which, if you think from the beta perspective, basically it says, okay, how much is the stock how is expensive or not. Okay, so that's what it tells on the beta side. And over one I find is, and is close to 2, is a little bit risky stock, and but the dividend is not bad, is 3.36 percentage, which is okay. But I also like to know you, right? I don't have any exposure on American banks. I have do exposure on the Canadian bank, but not on the American side. But I also like to know here, if you can kindly put on the comments on the video which bank stocks you like, or do you own, right? So put in the comments below, and then we will see, okay, which bank people are more people have more trust, and they invest in their hard-earned money. Okay, and if you own these stocks, please put a comment there, or if you own the Apple stock previously, or any other which I subsequently cover in these ones, so please put a comment that you own this one and what you think about these stocks. These are good to know, right? What people in the market is thinking about them. Okay, so this is number 2, and this is 11.19, so this is the second highest weight in his portfolio on this stock, which highlighted in this orange color, right? So which one is the third stock? Can you make any guess on the third one? Stock, do you think is a bank, another bank, or do you think is any other sector, right? So honestly, if I don't even remember myself, so let's do this. But if you want to make a guess on doing this, just pause the video and just 30 seconds maybe, and then try to guess. But I'll continue. I don't want to have that much patience. Okay, yeah, this is a Coca-Cola drink company, right? He's, whenever I always saw him, whenever he do any pitch on his shareholder meetings, he has a Coke can in front of him. I like Coke too in terms of drinks, but personally, I don't own Coke. Okay, so that's just a disclaimer from my side. Okay, so what next? Its market cap, of course, is big. It's a dividend paying. One of the beauty I like about this is the 0.57. The beta is way low, so I like it. And if you compare with the other one, the dividend is 3.76, and the number 2 on his is 3.36. So pretty, even a little bit higher, and you see it's less riskier. And the price is also, what was the price, is a little bit double. Maybe that's one of the reason, right? Because otherwise you see everything is same, but this is, the beta is, Coke is lower, so more consistent in terms and less risky, right? So that may be. But one thing I want to know, right? So basically I don't own Coke, so there is a Coke and there is a Pepsi. Okay, so at least in America, and when people try to compare in terms of drink, forget about stocks. Okay, so I in terms of drink I prefer as a Coke, but what about in terms of a stock, right? Which one you? I did my analysis on Coke or Pepsi. I don't want to reveal here, or maybe it's indirectly already revealed because I don't own Coke, right? But these are which one you own, right? Okay, I own a little bit on the Pepsi side on the stocks. I haven't made a video on that one. Maybe in future I'll make. If you want me to make, just put in the comments. But I want you to know: do you own any of these companies? Because these are more like a sugary drinks, and now the trend is more towards the healthy drinks, right? So, what do you think from that perspective, right? Or any other drink which you think, uh, rather than Coke or Pepsi, any other ticker you think is strong and maybe we are not aware of that, and you want to think, okay, that's a good. So please put in the comments, and these are the and if more people like it, maybe we'll see. Maybe we'll cover or make a video on that one, right? But so that's my point on this Coke on or the Pepsi. Okay, so again, this is number three, and number three is 10.8, so a little over almost 11% portfolio, right? So which is a lot. So 10% of this is, I think, is $18.7 billion almost, if you think from that perspective, right? And again, this is a US based. Okay, next is the seventh one, or fourth, it's the fourth one, right? We already done three. Which one is the fourth one? I don't honestly remember. Let's see, maybe it's American Express. Yeah, okay, it's American Express, the credit card company, right? Services company. Okay, so this credit card company, this American Express, is when people have American Express, this is more like a posh card. Mostly business, corporate has this card, and they paid it. It's pretty good. But again, if I want to compare on the card side, the beta is a little bit higher. It's dividend paying, price P is low, just over uh, 10, and this is the ticker, right? AXP, if you want to do more research. Market cap is again as a large cap, so all high level metrics are there, not bad. But now, okay, so Bill Gates has it again. I don't own American Express, as a disclaimer. But what about this, right? Which one you think you? There is another company, or Visa, Mastercard, and American Express, right? These are three big credit card services company, right? What do you think on these companies, right? If I just want to compare these three companies, do you think you own any one of these three? So could you mind sharing with me which one you like, right? Or there are some other company, right, on the money transaction, or there are some. If you I go a little bit beyond, then there is a PayPal and some other company, right? Famous company, right? Do you think that one should be good, right? So think from that perspective, and if you have any of your favorite, I'll put comment. Okay, but I don't own American Express, so, and I didn't did much research on it, but as a well reputed, so it's a well known brand in the market. Okay, so let's go next. The fifth one. Any guesses on fifth one? Let's see. Wells Fargo's. Okay, Wells Fargo is another bank. P is way below. Again, it's a little bit high on the P side. Dividend is way high, 8.73%. Okay, so 8.73%, but he only put 7.39 here in this portfolio. Wells Fargo is okay, but they have certain bad. I always heard, well, not always, but some bad news in the market in terms of something bad going on. So I'm not very positive on the Wells Fargo side, honestly. Uh, he owns it. Maybe he is owning for a long time. I didn't track historically his portfolio. I just see this year and shared the video with you. But what about you? Think about the Wells Fargo's? Do you do services with this bank? How you find it, right? So yeah. So if you can share, then literally good. Okay, so far we have seen two banks, one credit card services, and okay, so let's see the sixth one. So 6 month we are going on the green. Green is 4.5 9%. So let's say which one is this one. Any guess? Okay, Heinz. Heinz is, or the Kraft, right? Is it only is the $35.19 billion company. Beta is close to 1. That's okay. Dividend is way good, right? 18.79%. Oh, sorry, PE is 18, right? Is I need to see on the sector wise, but seems like a little bit is to what level it is, right? But this is the Kraft Heinz. So what do you think? So when I initially, honestly, when I was preparing this video, maybe I'll share with you. I'm not sure if I have closed this. Yeah. So when I was preparing this video, I thought only Heinz is the ketchup and mayonnaise, and that's it, right? But I want to say, yeah, please do comment in the video. Do you like it? But I was very surprised, right? I'll share with you. Okay, first let me go to this Heinz Kraft Canada, right? So many brand, right? So this is the Kraft brand. I have never noticed. Uh, my kids eat this peanut butter and this Philadelphia cheese we have been eating. So we notice, but never think from that is linked to Heinz and Kraft altogether. Honestly speaking, and they have a pretty good brand there, like Parmesan cheese. Kraft is well reputed brand in terms of cheese dairy. Most of these we are using as the products, right? Which other products basically you like and which you don't like on the Heinz side? If you can let us know. The Heinz dinner, right? Most of this is on the global brand, right? And then I'll also show you on the Canadian side, which a Canadian brand, because we are Canadian, so on the Canada side, so we only have few brands, but like Diana sauce, I don't use this, but some good reputed brand is there. Yeah, Miracle Whip, Mayos, and on the okay, so this is on the Canada side, but on the global side, it has again big names, right? And this is pretty much global company. So I thought just a little bit side, I'll share this with you on the Heinz brand. Okay. So the price, if you think from that perspective, now come back to this, it doesn't look like that high, right? On the global brand perspective is 30 and the PE is 18, and this is, I think, is a very old company as well, is way beyond. And okay, so maybe I will cover something in future video on this one. If you want me to cover, please put a comment on this one, but I'm positive on this one. Looks good so far. Okay, this is the Moody's Corporation. Okay, so people who doesn't have exposure to the maybe doesn't work in the banking sector or the financial sector, these are the any the bond market especially, or any bonds get issued. These companies like the Moody's, S&P 5, S&Ps, not 500, sorry, S&Ps, Moody's, Fitch, and one more was there. I don't recall. One more company was there. They're the top companies, and they do the ratings on the bonds. So they do the ratings on the bond issue and the bonds. So top. Let me see if I able to get top credit rating agencies. So right, top is it. Okay, so these are the big three: S&Ps, Moody's, and Fitch. These are the ones. Okay, so the business is simple, right? It's just more like a services kind of business. They rank the not only that, but cities, countries, and their ratings as well. Maybe if you want me to do a video on that one, I'll do a video on that as well. Okay, but basically these are the companies, and the P is quite high, right? 31 right now. I really don't like that high PU, especially on this company. But from the business model, it's very simple. So that's very good news on it. And I used their the Moody's and other credit ratings is quite good in terms of their ratings. Okay, the ticker is MCO. If you can go there, and the price is quite high as well, $251 on this rating companies. So number seven is blue. Okay, so after green, so it's only 2.597 percentage in this Moody Corporation what he owns, right? But this is something too good to look at. Let me know if you own any other credit rating agency, maybe in your country, right? Because this is a US based companies, pretty much US and Canada and Canadian companies. These they cover as well, and we use these companies. But in your country, do you have any other companies or not? Let me know. Okay, this is a very big investment bank, JP Morgan Chase. The P is the good thing is stand out clearly. If you haven't, the P ratio way 9, right? Even 10 is beauty, right? And the beta is is 1.19. I'm not sure why the beta is higher here. As again, is a very big bank. You can see in terms of the market cap, is paying dividend is another beauty, and I think it's not a bad time to own just by looking these. But we need to do some comparative analysis, right? Because there are tons of another investment banks are there, and especially I think after the last 2008 or 9 credit crunch when Merrill Lynch goes bankrupt, right? And I think Merrill Lynch or some other bank. Sorry if I don't. I think Merrill Lynch bought by BAU, but anyway. So these are the investment banks. These are not retails banks, but this is good to. It looks like cheaper in terms of the PE. Any other investment bank you follow? Please do put a comment, right? Because I don't follow these investment banks, and I'm good with the safe retail banks, which are steady, give good dividend growth, and I'm not very greedy. so that's why. And I'm being honest, right? In this video, it's just the open communication between my subscriber or whoever is watching this video, right? So is honest opinion, right? You don't even Warren Buffett said, right? You don't have to be expert in all the sector, but whatever you do, make sure you expert. So I follow the same strategy. And this one more actually, since the quote I remember on him that he 2 rules, right? And many people in the video, even on the YouTube, I noticed making the same code, and I'll try to follow them as well, right? The rule number 1 is don't lose your money, right? Because if you lose your money, that's not good, right? Nobody like losing money. And rule number 2 is make sure you don't forget rule number 1, because many times you get carried away, right? In terms of heard news, so many news channel bullshit. Every day they're saying something, right? Without even looking at the fundamentals. So if you're strong on the business is strong, no matter, right? Even the big player sometimes fall a little bit, but they run a long marathon. So I totally believe in that, right? To follow the long marathon, and so it's multi-folds or multi-baggers that side. Okay. So not too much talking. Let's go to the next one. Okay, US Bank Corp Dell. So this is another the company. So I don't follow this as well. This looks cheap in terms of the PE again, maybe because of the market, and the ticker is USP. Okay, and this is only 9 is this one 2.60% of his portfolio, but his portfolio is big as well, and the dividend is quite good here, 5.48%, right? If is not very and this market cap is 47, almost $47 billion. Last not the least, Devida is the one healthcare. I have no idea on this one again, but this is the information piece. Okay, and the price is, I don't know, it's a little expensive. Maybe it's worth it, but yeah, one thing to note here is not paying dividend. Okay, so doesn't mean that Warren Buffett has all the dividends. So it will literally prove that. Okay, so these are the things basically I have in terms of top 10 portfolio. So the next is okay, we are done. Thanks for watching my video. And one more thing, and if you want me to cover any other stocks or any video about any high net worth guy, maybe so please let me know. Any other your favorite portfolio manager or any wealthy guy like Jeff Bezos, Bill Gates, Charlie Munger, right, or any other which you think, right, maybe we don't know, or any other stocks which you think is doing good, and it's good in terms of future, right, long term, right, because things are cheaper right now, right? Okay, things are shaking the market, but at the same times, things are cheaper as well, right? So depend which side you are looking, because if it's cheaper, okay, it's good to go and do some investment, right? So as long as the company can survive this crisis. So that's why I'm doing this thorough analysis on whenever I go and buy something, at least whatever knowledge I have, and you never know in the future, and try to diversify as well a little bit. Okay, so that's on my side. But what do you think on that, this portfolio, right? Do you think is good? And last not the least, please like it and subscribe to this channel. Okay, thank you very much for watching, and see you next time. Bye for now.